Strong economies generally have strong currencies. The two seem to go hand in hand. The reason is strong economies tend to experience higher levels of inflation. Here's how it works. The stronger the economy is, the higher the demand for workers becomes. As demand for workers goes up, wages for those workers also go up. The more money workers take home in their paychecks, the more money they have to spend at retail stores, on cars, and on houses. As demand for goods and services increases, the price for those goods and services also increases. In other words, inflation increases. Central banks watch economic growth indicators to give them a sneak peek into what inflation pressures may look like in the future. Four of the most important indicators central banks watch are gross domestic product, or GDP, payroll employment, durable goods orders, and retail sales. Gross domestic product, or GDP, represents the total value of a country's production during the period and consists of the purchases of domestically produced goods and services by individuals, businesses, foreigners, and the government. A high GDP figure is often associated with the expectations of higher interest rates. Payroll employment is a measure of the number of people being paid as employees by non-farm business establishments and units of government. Large increases in payroll employment are seen as signs of strong economic activity that could eventually lead to higher interest rates. Durable goods orders are a measure of the new orders placed with domestic manufacturers for immediate and future delivery of factory hard goods, like manufacturing equipment and tools. Rising durable goods orders are normally associated with stronger economic activity. Retail sales are a measure of how much consumers spend at retail stores. Retail sales are a major indicator of consumer spending because they account for nearly 1/2 of total consumer spending and approximately 1/3 of aggregate economic activity. Rising retail sales are often associated with a strong economy. You can watch the same economic indicators the central banks watch. Start practicing now. The more you do, the more likely you are to be successful in your forex trading.